Hi everyone, I'm Matt from Looking to Bitcoin, and today we're going to be looking at Bitcoin and the traditional markets we invest in. To do this, we'll be using a number of resources, all freely available on lookintobitcoin.com, your number one source for Bitcoin information. If you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So right now we're just on the Bitcoin price live page, and if you scroll down a little bit, you'll find one of our new additions to lookintobitcoin.com, which is where we can see the actual comparison of the Bitcoin price action versus the S&P 500, the Dow Jones, Tesla, and Apple. So for really big, key, impactful metrics we can actually compare Bitcoin's price action to in the traditional US equity market. And as we can see here, Bitcoin in the orange, Tesla in the purple, there is an obvious immediate correlation that we can see between Bitcoin and US equities. We can see, especially going down onto the yearly chart as opposed to the 3-year, if we exclude the recent Bitcoin drop-off we had due to the FTX insolvency and recent price collapse we had because of that, we can see there's an almost one-to-one correlation with Bitcoin and these traditional markets. Now, this might go against what a lot of people really anticipate when investing in Bitcoin and cryptocurrencies. A lot of people give the comparison of Bitcoin to a digital gold that is more of a hedge against inflation and the devaluation of global fiat currencies. Fiat currencies just being the government issued and regulated currencies such as the US dollar or the Great British Pound. Really, Bitcoin was invented as an opposition to the current traditional and economic systems that a lot of the Western world is implementing. So if we just go onto TradingView, we can actually see here in a little bit more in-depth comparison between Bitcoin and a few other markets. So to start, if we just add the S&P 500, which is one we have on lookintobitcoin.com, we can see here just on a little bit more of an extensive price history comparison that again, Bitcoin has almost a one-to-one correlation with the S&P 500. Now, obviously, these returns in Bitcoin are far exaggerated both to the upside and the downside. Bitcoin is acting as a very volatile, more speculative and risk-on asset, but it is still very much tied to the price of the S&P 500. We can see when the S&P or US equities in general increase exponentially in value, usually Bitcoin is following that. And again, once we see a stark decrease in one or the other isn't far behind following that too. And if we go back to the comparison we made where a lot of people have this idea of Bitcoin being a digital gold, if we actually remove the S&P and just apply the gold price, so we can see here in this goldish color here, this is the price action of gold over the past few years, we can see there's nearly an inverse correlation between Bitcoin and the price of gold. When Bitcoin's increasing, we don't usually see the price of gold increasing exponentially too. In fact, when Bitcoin's price is increasing exponentially, we can often see gold decreasing. And as well, when we see gold increasing massively, Bitcoin may be stagnant or even decreasing in price. So this inverse correlation doesn't really fit the narrative of Bitcoin being a digital gold, at least not in terms of price action, as Bitcoin isn't really acting as a hedge against US equities or the global stock markets, really is more tied to the performance of those than we originally thought. If we then just remove the price of gold and add the price of oil, we can see this actually shares a fairly strong correlation as well to the US stock market and global equities in general. We see, again, similarities. Once we see a big collapse in one, usually the other two aren't far behind either. Now, why is this? Why isn't Bitcoin acting as this hedge against inflation, this uncorrelated asset that is providing returns even during recessions, even when global economic factors look so bleak, bearish, and hawkish? Why isn't Bitcoin performing so well in those circumstances? Well, really, we need to consider that Bitcoin as an asset class isn't really that old. We're talking about 15 years of price action here. So really, excluding maybe this current recession that we may or may not be in, depending on your definition, that we're currently seeing in global equity markets, really Bitcoin hasn't really had too many global recessions to actually live through. It was created in the aftermath of the 2008 global financial crisis. So really, apart from the intra-decade boom and bust cycles we have in the cryptocurrency markets, Bitcoin hasn't really had the opportunity to decorrelate and decouple from the prices of equities during an extended drawdown. And the most recent year of price action is the first opportunity we've really had to do so. I know there's been the COVID 2020 crash and multiple other corrections along the way, but these weren't drawn out long, month-long, even year-long recessions that Bitcoin has actually had to go through. So right now, Bitcoin isn't necessarily fulfilling its criteria as a hedge against global recessions and general bad economic policy. But what we can see is there is an inverse correlation between Bitcoin and the strength of the US dollar. Now, as we usually map out Bitcoin, as we usually compare it to the US dollar price, for example, right now, Bitcoin is priced at $24,662 US dollars. Usually that is the most popular way to map out the Bitcoin price. We can see there is actually an inverse correlation between this Bitcoin price and the strength of the US dollar. So once we're actually measuring Bitcoin against the dollar, if the dollar is very strong, meaning lots of people are wanting the dollar, there is a great demand for US dollars across the global economy. This usually happens during drawdowns or recessions or times of risk off, where people aren't as willing to speculate on future potential gains and profit. Maybe people are trying to take a step back, maybe settle themselves and go into less speculative asset, being the US dollar. And especially within the cryptocurrency space, a lot of people do feel as if the US dollar and global currencies, these fiat currencies, may be worthless because they're not truly backed by anything. And these fiat currencies, which are issued and regulated by global governments, aren't really providing any value, as they over the long term tend to decrease in value, and your savings usually are eaten up by inflation. As much as that may be true, realistically, we do need to acknowledge that, at least for the time being, the US dollar, big global currencies are the safer stores of value for people's wealth, especially during the harder times during investment cycles. So we can see this negative correlation. Once we see strength in the US dollar especially, we usually do see Bitcoin's price decreasing. And once we see the US dollar decreasing in strength, maybe there's more US dollars flooding the market, maybe there's just less demand as people want more risk on assets, we usually see Bitcoin far outperform any other asset class also. So a lot of you may be wondering, is this always going to be the case? And obviously we can't look into the future and see, is Bitcoin ever going to decouple from traditional markets? But one thing we have to take into account is that the Bitcoin fundamentals are changing on a slightly different pace and time cycle compared to, say, the S&P 500. And this is due to the Bitcoin halving event. Now, Bitcoin was created to try and not necessarily be a deflationary asset, but be an asset that doesn't have an increasing inflationary rate. So, for example, across many global markets right now, we're seeing very high levels of inflation, prices increasing across the board, whereas the Bitcoin inflationary rate is decreasing at a very predictable and steady rate. It's halving about every 4 years. So right now, the inflationary rate of Bitcoin allows 6.25 new Bitcoin to enter the network every 10 minutes or so. But in about a year and a bit's time, that will actually decrease to 3.125 Bitcoin. So as Bitcoin's demand over time grows and increases just due to the general maturity and adoption of Bitcoin and cryptocurrencies in general, we're actually seeing the supply slowing down. And this stock to flow model, which factors in this fundamental stock to flow value by taking into account the current circulating supply and the new supply of Bitcoins entering the market, we can almost get this fair value, fundamental value of Bitcoin going forward. So right now, this stock to flow price is predicting a fair value of Bitcoin of around $60,000, which we did reach and actually surpass with our previous all-time highs we set in the most recent bull cycle. But we can see going forward, this is predicting exceptionally high fair value valuations of upwards of $500,000. Which may be optimistic, but the real point we're trying to cement here is once this halving event actually occurs, this may be the opportunity for Bitcoin to decouple traditional markets and increase in value regardless of the current economic factors impacting the US economy, global economies, and the prices of equities, commodities, US oil, everything around that. And we may truly see Bitcoin fulfill its potential to decouple against traditional markets and truly act as a hedge against recessionary markets and the bad economic policies that a lot of governments are implementing across the globe. So just to summarize, Bitcoin has a strong correlation to more traditional risk-on assets such as US equities. And even though Bitcoin is often labeled as digital gold, it often has more of an inverse correlation to the price of gold and other precious metals, and usually follows, like we said, US equities and other risk-on assets. And at its current level of maturity, the cryptocurrency markets are still yet to live up to their potential as a hedge against inflation, recessions, and the general devaluation of fiat currencies. Although we do need to consider with both global and crypto-specific fundamental factors, such as halving events, such as global market recessions, there is always the opportunity for Bitcoin in the future to decouple and really be an uncorrelated asset that performs regardless of other global market assets. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to get access to live chats, in-depth newsletters, indicator alerts, private TradingView scripts, and more, all for a fraction of the standard industry price. And let me know in the comments down below and on social media what your thoughts are. Do you think Bitcoin is a true hedge against inflation and other economic factors, or do you think it will always be tied on to US equities and other risk-on assets as just a more speculative and volatile method for trading and investing? Let me know. I look forward to reading and replying to all of them. Thank you very much for watching, and I'll see you in the next one.